Welcome to another Allstate monthly product training. So this training is going to be recorded, so it'll be posted to any of the channels for your agencies that you need if you guys need to reference this later, okay? My name is Nick Murillo. I'm the training manager here with Allstate. Excited to have you guys if you don't know me. So we're going to talk about short-term medical today. Allstate's short-term medical plans today, okay? So we're going to touch on both Allstate's normal short-term medical plan, which is the one we've been selling for years, right? And then we'll talk about the HSA-eligible short-term medical plans that have been introduced to us recently, the last year or so here, okay? And so we'll touch on both of those. What are the similarities? What are the differences? And how this stuff works, okay? The chat is open for you guys, so if there's any questions, comments, concerns throughout this thing, just throw them in the chat, and we'll go from there. Okay. So let's go ahead and fire this thing up for you guys here. The first thing we're going to do, again, we're going to talk about the regular short-term medical. We're going to talk about the HSA short-term medical, and then we'll go through how it all works, and then some resources for you guys at the end. Okay. Cool. Why the heck should we sell short-term medical? Okay, well, I recognize some of the names in this chat. So some of you, I know you know why, right? And some of you, maybe I need to tell you why, right? And so big thing here for short-term medical, guys, is open enrollment just ended, right? You see the second bullet point down. I mean, this is the real relevant stuff for us right now in this industry. You're going to naturally get these customers that procrastinated, right? God bless America. It's one of the skill sets that all of us Americans have, and it's procrastination, right? And so at this time of year, we're starting to find more and more customers that, whoops, I waited, I missed open enrollment, and now I need some help, right? And without a qualifying life event, we've got to look for creative ways to help them, right? And so the go-to in the industry has always been short-term medical on that, okay? And so that's what we're going to teach you guys on. I would be remiss if I didn't talk about the political landscape we're in and just saying that short-term medical might be going away too. We haven't heard anything official yet. So as of right now, we have 3-year short-term medical plans available. Use that as a marketing piece, guys, okay? You're going to be talking to customers that are in this health insurance situation that's uncertain, right? We don't know what that's going to look like tomorrow, okay? We don't know what that's going to look like a year from now. And so when you're talking to your customers and we're able to give them a solution that we can say, hey, this is a 3-year solution here. A lot of customers like that peace of mind in this market that we honestly, nobody knows what's happening next, right? And so short-term medical just as an alternative to Obamacare, if they don't qualify right now for a qualifying life event, they can't get Obamacare, right? So we need alternatives, and that's where short-term medical is really going to come into play. You're going to find price point too. It just makes a lot of sense in most states, okay? So let's kind of jump into that a little bit. Some of the highlights of short-term medical, okay? The one that I really like calling out, ironically, is the second bullet point down on this one too. The deductible is waived on urgent care visits, and I'm actually going to show you that in the back end of this plan too, what that looks like and why we really like to use that, okay? You can start these plans any day. We could start it tomorrow if you wanted, right? So for a lot of customers as well, that works out really well. Instead of having to wait till the first of the next month or anything like that, hey, if you need insurance, we can start this thing up right now, okay? So very, very important stuff there. Let's jump into the plan designs here. Now, guys, on what I would call normal short-term medical, right? This is going to be what we always had as short-term medical for the last 5 years, okay? That's what we're going to talk about next year. There are 4 levels of our normal short-term medical. The top level, or the most expensive level, is the copay enhanced PPO. And so that'll be the first thing we talk about. The next is our best seller. It's the enhanced PPO level. That one you guys have determined is the best value on the market because by a long shot, those are our best sellers. Then we have the essentials. That's kind of your bare bones cheap plan for that customer that's just looking to get a cheap insurance plan, and you probably think they might cancel it in a couple months, right? That's where we go essentials, or just using it as a band-aid to get them over to a better plan, maybe on ACA or something, right? And then the last is guaranteed issue. So we'll touch on that as well, and we'll touch on what guaranteed issue looks and sounds like over here in the private market of insurance, okay? So the first one of those four levels that we talked about is the copay enhanced, okay? This was given to the market because you guys, the agents, were asking for it. We had customers asking for copay plans because that made it feel more like normal insurance to them, right? And so we built out what would that look like to build out some plans with copays in it. And that's what we did here. So these are our copay enhanced PPO versions of short-term medical. Guys, if you've ever attended one of my trainings before, you know simple leads to sales, right? And so if it's simple to explain, it's simple to sell. Due to that, I prefer 100% coinsurance, right? Even though most customers are going to tell you, yes, I know what coinsurance means, do they really? Do they really understand this stuff, right? And so it's just giving another category for somebody to get hung up on and maybe lose a sale on. So I love a $6,000 deductible, 100% coinsurance. Mr. and Mrs. Customer, what that means, we've got a $6,000 deductible on this plan, but once you hit that, everything's going to be covered by the insurance company at 100% up to the next $5 million. That's easy to explain, right? And so if I'm going to write these copay enhanced, that's kind of where my brain goes on it. Now, I'll argue, though, I normally won't go up here because of cost, right? And so that's always a conversation with your clients. Are they looking for budget friendly, or are they looking cost doesn't matter, get me the best of the best, right? And that's really a conversation. But if cost is a factor, we're probably not going to go up to the cost on the copay enhanced, and we'll look at an alternative in the enhanced PPO, okay? Just before I move to the enhanced PPO, I want to show you what are the copays, right? And so here they are. These are the copays that we have rolled in to the copay enhanced. So $40 for a primary care physician, $60 to go see a specialist, okay? The generic drugs there, it's $10 generic drugs, $3,000 annual max benefit. That $3,000 though, guys, one caveat I need to call out, that's its own separate insurance category. So that $3,000, if your customer got $3,000 of prescriptions filled this year, that does not count to their deductible, okay? That deductible is a separate category from this. So just make sure you guys are aware of that. And then adult immunizations, it says applies to deductible and coinsurance. If you guys don't know what that means in insurance jargon, that just means you're going to pay for it, right? If it applies to deductible and coinsurance, it's just, hey, you've got coverage for it, but you're going to pay for it at whatever your deductible and coinsurance is on the plan, okay? So that is how the copay plan works. If I'm being honest with you guys, it's not something you're going to sell a ton of on cost. And let me show you why, and probably why a lot of you guys have determined that the enhanced is the best seller. So keep it simple, right? My favorite go-tos here is the $5,000 deductible, 100% coinsurance. Simple to explain, simple to sell. Now look at this. Lower deductible than the copay plan, still with 100% coinsurance. And it's cheaper. So it's a trade-off there, right? And again, the market has determined that this is the better selling plan, right? Now, I want to correct the mistake I see a lot of agents make, okay? one mistake I see a ton of agents make is the alternative that they suggest to their client is the $5,000 deductible 100% coinsurance, or to save a little bit of money, they do the $5,000 deductible 80/20. I personally don't like this, and let me tell you why. $5,000 deductible 80/20 still has another $5,000 out of pocket, right? The $10,000 deductible 100% coinsurance is cheaper than the $5,000 80/20. And if they've got 5,000 and 5,000, they still have 10,000 out of pocket, right? So my brain is going to say, look, if my exposure is still going to be $10,000, let me get you the cheapest plan that's going to be that $10,000 exposure so that I can put better supplements in place to make this plan really sing for you, right? And now, again, I know some of the names on this call. I know some of you are already doing that, and I love y'all for it. For those of you that are doing the 5,000 80/20, again, just think about it and look at the cost, and you're going to see why wouldn't I just, and 10,000 100% is easier to explain, right? Now, one call out here, guys, you'll see the coverage period maximum is only $1 million on the enhanced PPO, whereas on the co-P&S it was $5 million, right? If you're newer, you're going to be like, Nick, that's a significant drop-off, and you're darn right it is, right? I'd encourage you guys, though, ask around the industry a little bit. It is rare that you run into the customer that's going to hit $1 million in medical bills in a year, right? It is important to know that number, be aware of that number, but don't be scared of it when you're selling, right? The vast majority of the clients that you write aren't going to hit that, okay? And then your one-off client, if it happens, cool. We're doing a review with our clients annually, and hopefully they call you if something major is happening on their plan. We can then look at adjusting their plan and moving them to something different if we were going to get close to this coverage period maximum, right? So don't be scared of that number as much. Just be aware of it, okay? And if you really want, you can jump down to the $25,000 deductible 100% coinsurance to open up budget. That one's a tough conversation with clients, but if you're really getting the client to think about this insurance stuff, there are plenty of sales that do happen in that range. So it's a conversation. It really depends on where the client's budget is and what their goals are, right? Cool. Now we'll talk on this essentials level one, okay? The essentials level, okay? This one is one that we're not going to sell a ton of, but it does have its place. This is going to come up when your customer, you think they're either looking for a small Band-Aid, maybe just to go to a doctor and get something checked out. They're probably going to not keep it very long. Or they're like, look, man, I should have been on Obamacare. I screwed up. I can't afford insurance, but I need something to cover me through the end of the year till I can get back on Obamacare, right? Cool. Well, I don't have the greatest plan in the world for that scenario, but we do have a plan available for you here, right? Obviously, the negatives here is a 60/40 coinsurance, right? And then $250,000 coverage period maximum. So not a superstar plan that we're going to lead with, but it does have its place in the market, okay? And then the last one here, guys, is guaranteed issue. Now, if you've been in the industry, you know what I'm about to tell you. If you're newer in the industry, let me tell you what this guaranteed issue term means in the private market of health insurance, because short-term medical is a private market product, okay? So in the public market of health insurance, Obamacare, right? If you hear that word guaranteed issue, it means come on board. We will take your sick, your burdened, your wearisome, and we will pay for it, right? Does not matter what you got going on. Come on board and we will pay for it. That's what guaranteed issue means in the public market in Obamacare. In the private market of health insurance, when you hear this term guaranteed issue, it's a little different. It's saying, hey, Steve, you can get this plan, okay? But it's a handshake agreement that, Steve, look, if you had cancer before this, whether or not you had our insurance plan, you were going to have to pay for the cancer treatments on your own, right? We can agree on that. So what we'll do here is, look, Steve, you're going to still have to pay for that cancer treatment on your own, okay? But we can give you an insurance plan for anything else. So if you get sick with the flu, if you fall and break your leg, right? We can get you protection for that. And so that's, if you guys ever hear guaranteed issue in the private market of health insurance, it's, hey, you can get the plan, but we're going to have a handshake agreement that whatever stuff you're bringing onto this plan with you, that's your stuff. You're taking care of that. We'll just take care of new items, okay? So just be aware of that when you hear guaranteed issue. And so that's how this plan works. We'll take you onto this plan, whatever your issues are, even if they don't pass the health questionnaire, they don't pass the weight limits, anything like that. We will take you onto this plan. But for example, let's say they did not pass the weight limit on the normal plan, so we get them a guaranteed issue. Well, if they have an ailment that goes wrong and we can draw a line to their weight, we won't pay for that claim. So just be cautious on that stuff, okay? Just be aware of how that works. Whatever they're bringing on with them, if we can draw a line that, hey, this new thing that happened actually is related to this old thing, that's on you, right? Cool. And then obviously we need to call out, it's not an amazing coverage period maximum either, 100,000, and it's an expensive plan, okay? So just be aware of that. We're going to go into the back end of this now. So all 4 levels of short-term medical that we just talked about will follow these rules I'm about to go over, okay? The first thing, remember, simple leads to sales. We believe in that wholeheartedly here at Allstate, okay? So we try to keep the back end of this stuff simple for you guys also, okay? There are some carriers that have a different thing for this, a different thing for this, a different thing for this. Try to keep it simple for you guys. So look, what happens if my customer goes out of network? They can expect to pay about double, right? It says double in network amounts, co-insurance. They can expect to pay about double. Just keep it simple, right? Then check this out. Family deductible. Now we need to call this out, guys. On the plan, let's say I wrote a $5,000 deductible, 100% co-insurance plan for myself, okay? Well, Nick has a $5,000 deductible and then 100% after that. So that's my deductible. If I bring my wife onto the plan with me, I have a $5,000 deductible and my wife has a $5,000 deductible. So technically, my family out of pocket is $10,000 now. Nick is only responsible for $5,000. So if Nick hit his $5,000, he's tapped out. But we can add a second with my wife. Then if we add our daughter to the plan, we would have a third $5,000 deductible. She would have one as well. And then if we decided to have 10 more kids and move to Utah, all the kids stay on their one deductible, okay? So husband, wife, children, okay? That is how our 3 deductibles work. There's one call out as a difference from Obamacare, okay? And you guys will notice this. Our family deductibles stop at the individual, okay? So if Nick hits his $5,000 deductible, that's it. Nick's done. And now we're running up into my $1 million, okay? On Obamacare, if I turn my individual plan into a family plan, in a lot of states, you no longer have an individual deductible. You'll see that term change to a family deductible. They just put you all in a group together. So on Obamacare, Nick would go straight up to the family deductible, which is double the individual deductible on Obamacare. That's a big caveat difference, right? So on short-term medical, NICS deductible still 5 grand, and we're good there. On Obamacare, it would turn from 9,000 to 18,000, right? My deductible would be 18,000 because it's now a family deductible. On here, short-term medical, the only way my family would have that $15,000 exposure is like if we got in a car accident together, right? Because then we're all three going to trigger medical bills at the same time, okay? So big difference in how Obamacare does deductibles versus how short-term medical does it, right? But capped at 3. Just be aware of that. Some other fun stuff here. So doctor's visits, pretty normal. Applies the deductible and coinsurance. That means you'll pay for it, right? These next two I really like, and so we'll talk about them a little bit. So these next two, urgent care. This urgent care is the reason why I believe that you guys aren't selling a ton of the copay enhanced and why you just sell the enhanced, right? A lot of agents and brokers out there have figured out, wait, so you're saying I can kind of treat urgent care like a copay for my customer. I can kind of tell them to just go to urgent care. Yeah, that's what this looks like. So let me read this to you. It's unlimited visits to urgent care, a $50 access fee. So they're going to pay $50 to go to urgent care. Check this next line out. The deductible is waived and the remaining cost applies to coinsurance. What happens if they're on one of those 100% coinsurance plans? That means they just pay a $50 access fee to go to urgent care, okay? That is a huge benefit to have in the back pocket there. And we're getting better in the world now. You go back 5 years ago, nobody even knew what urgent care was. Now it's like, okay, no. They're on every street corner, guys. Like right next to Starbucks and 7-Eleven, there's an urgent care center. I promise you drive by one every day, whether you know it or not, right? Guys, urgent care is one of the most affordable medical billing platforms out there. We know that as an insurance carrier, so we are trying to educate you guys and our clients in that and say, hey, go to urgent care. Let's help everybody out here, right? So let's look at ER. Unlimited visits look similar. $250 access fee. Okay, we're still looking similar. Oh, and less admitted. So cool. On ER, we can waive that access fee if we're actually admitted. That's cool. But look at this next line. It's a little different. Applies to deductible and coinsurance. And what did that mean? That meant they're going to pay for it, right? Well, guys, the ER is the most expensive medical billing platform out there. And what is the number one reason people go to the ER in America for? The flu. We are trying to keep people out of the ER with the flu so that people with actual emergencies can get seen in a timely manner and that we're not passing around any viruses and pathogens that could get a whole ER sick, right? That makes sense, right? We can all agree to that. So don't go to the ER unless it's actually an emergency. And if it's actually an emergency, we'll waive the fee. But if it's not an emergency, meaning you could actually drive yourself to the ER, we're going to charge you fully whatever they charge us, which is very expensive, and add $250 on top of that. Okay, we are trying to educate the American public how to be wiser consumers in the healthcare space. Okay. And then diagnostics and labs applies to deductible and coinsurance, meaning you'll pay for it, right? Cool. Let's look at the next slide here. Inpatient, outpatient, normal stuff applies to deductible and coinsurance. The one call out on that is on the cheap one, the essentials PPO. We're going to limit that to 15 grand. So if you break your arm, you have $15,000 of coverage for us to fix it. If it costs more than that, you're going to come out of pocket. Child immunizations, first dollar benefit. If you're new in the industry and you don't know what first dollar benefit means, listen up. It's a term you're going to hear a lot. What it means is the insurance company is going to pay the first dollar. So that means the insurance company's paying for it, essentially, okay? So if you ever see first dollar benefit, assume that that's paid for by the insurance company, not by your client, okay? So child immunizations are paid for up to the age of 18. Awesome. Adult screenings, though, apply to deductible and coinsurance. You got to pay for them, all right? Cool. That is the back end of normal short term. You guys need to know about networks, okay? Networks are who determine what doctor we can go see, what hospitals we can go to, right? Well, good thing for you, we have two of the nation's largest PPO networks available to us here, okay? So Allstate uses both the Aetna Open Choice PPO network as well as the Cigna Shared Administration PPO network. Massive nationwide PPO networks. And the cool thing, when you're running a quote in the system, it will default you to whichever of these two networks is stronger based on that zip code. Now, the cool thing, you can change the network, look up doctors and hospitals to make sure that your customers' needs are met. But just know that the system will try to make an educated guess for you based off the zip code. So if you see it default Cigna, just assume Cigna's probably stronger in that zip code, but still do your discount double check, okay? I'm going to quickly glaze over the states here because, guys, this is public information, and I'll give you a website at the end of this where you can go pull this if you need. But here it is. One big thing I'll tell you, just a pro tip. If you're looking at maybe, Nick, should I get new non-resident state licenses, and if so, in what states? Pro tip to you guys, one that's got 4 check marks here is probably a good one, right? Because these are states that are allowing the private market of health insurance to flourish. They're not putting a ton of regulation on these products. You come down here to Illinois, there's only 1 check mark here, right? They can only do a plan for 6 months. Same with Idaho. Maybe that's not where I want to go to sell short-term medical, right? So think about that stuff. These are states that are legislating against that stuff, okay? And then here's the second half of that list of the states as well. Again, we won't spend a ton of time on it. Same thing. When you're looking through this, if you see 4 check marks, it's probably a really strong state for private market health insurance to maybe go get your non-resident licenses in, okay? Awesome. All right, that was original short-term medical. I don't even know if that's the term, but that's the term I'm giving it. Now we're going to talk through the HSA-compatible short-term medical plans, and these are newer to the marketplace. So I want to, thanks, Amy. So these are newer to the marketplace, so we'll spend a little bit of time on them, but I won't spend too much time because I'm a big believer in just giving you guys the gold. So I don't want to lose you in the weeds. I want to tell you the differences here, okay? So, big thing here. You guys are not financial advisors. You're not a CPA, all right? You did not go to college for that, all right? So, understand your role in this. You are just a health insurance agent or broker. Your role is signing them up for a health insurance plan, okay? As soon as it comes to investing advice, what type of account, where do I open it? You guys do not want to be the one advising on that, okay? You don't want to accidentally, whoops, I thought I understood that, and now you're testing how good your errors and omissions insurance policy is, right? You don't want to get to that. So, if the customer already has an HSA account that they've already been putting money into that they're already using for investments, awesome. Keep doing what you're doing, and I'll just help you get a health plan that will keep you qualified on the government terms to be able to keep depositing money into your investment account. If they do not currently have an HSA investment account, awesome, no big deal. What we can do here is we can help you sign up for the health insurance plan that would qualify you to be able to sign up for an HSA investment account. Now, I can't advise you on that side of things. What I would tell you to do is go to your bank or financial institution, speak to somebody there, or if you have another institution that you do investments through, like a 401k IRA, maybe go there, okay? That's as far as you guys go in that advice, okay? I am here to help you get a health plan that qualifies for you to be able to put money into this investment account. Any other investment advice, zip it. You don't want to get in trouble on that, okay? Here's what the HSA plans look like, okay? It's only 4 leveled versions. These are way more regulated by the government, as you can imagine, right? So you can kind of tell by the dollar amounts here. There's something about 7,500 the government has deemed is the magic number for HSA, right? So you see 6,000 plus 1,500, 6,000 plus 1,500, 7,500. There's only one plan that's not going to 7,500, right? So something about that you can tell is where the law is written, right? Without me even knowing the law. So again, simple leads to sales. I'm doing the 100% coinsurance. Look, these two, their out of pocket is already 7,500 anyway, right? Right? So we're looking at 6,000, 100% coinsurance, or 7,500, 100% coinsurance. Me personally, you guys do what you want. We could argue on it till we're blue in the face. Me personally, that's what I'm doing, okay? You can see it's $1 million coverage period maximum. This is a strong, strong plan, okay? Now, here's where we're going to get into some differences from the normal short-term medical, okay? And the cool thing with these differences, guys, there is no set rule on these differences, right? Like, some of these differences will mean that my customer wants to go on the HSA plan, and some of these differences, my customer is going to want to go on normal short-term medical, okay? There's not a one-size-fits-all, but know these, so when XYZ customer calls in, okay, I'm going to lean this way. What the heck do I mean by that? Here we go. So out of network, keep it simple. It works the exact same. If you go out of network, you can expect to pay about double. Here's one of our first differences. Family deductible is now capped at 2, not 3. For some families, that might be the selling point, right? Maybe they've got a child and they're like, I'd rather be stopped at $12,000 than 15 or 30, right? Maybe that's the route they go. So for some of our customers, this might be a selling point. The 2 times family deductible on the HSA versus the 3 times family deductible on the normal. That's the first difference that I want you guys to be aware of. There are 3 major differences, and each of them is stronger one way or the other. Okay, that's the first one, 2x versus 3x family deductible. The next major difference you can see is right here on the urgent care and emergency room, okay? For the emergency room, this might be viewed at as beneficial because they're not going to slap that penalty fee of $250, right? For the urgent care, we just lost that kind of $50 copay option, right? That $50 urgent care option, we just lost that now. So this is a conversation with your client, right? To some clients, that 2x versus 3x might be the selling factor. To some of them, I need that $50 urgent care, right? I'm not here to tell you which is better. Have that conversation with your client. And then the third difference here, and this one is a major one, guys, major one, is that very last line down. Adult preventative screenings and immunizations. That's like your mammogram, your pap smear, colonoscopy, and then some adult shots, like if you needed your, what's that one, everyone, shingles, things like that, right? Remember, I just taught you that term, first dollar benefit. That means it's paid for by the insurance company. Guys, that's going to be a selling point. You're going to have customers calling in asking about preventative, right? Adults. We now have a short-term medical plan that has that in there, okay, at a first dollar benefit. So make sure you guys are aware that that is a big, big difference, right? So we're trading a $50 urgent care for adult preventative screenings and immunizations at a first dollar benefit level and only 2x the family deductible. And the ability to be able to invest a little bit, right? So those are the major differences and then the similarities between our short-term medical plans. The HSA one only has one network, okay? It's only the Aetna Open Choice PPO network, and it's very limited in the states it's in. But the other side of this coin, you notice all the check marks here. Maybe these are some states you might want some non-resident license in, right? If these states are playing ball with both short-term medical and with HSA, these are some states that love their insurance agents and want to work with the products in those states, right? Pro tip there, okay? All right, we're going to talk on eligibility, and then we'll talk on some resources for you guys, but we are getting close to wrapping it up here, okay? So eligibility, we can start at 60 days old, so 2 months old, up to the age of 64 and 10 months, essentially until they age into Medicare, okay? And then child only goes to the age of 18. At that point, they're an adult only, but they could be on the parents' plan until 26. Here's that weight stuff we were talking about, right? So guaranteed issue, you could still get it if they don't meet these weight qualifications, but it's 300 pounds if male, 250 pounds if female. And yes, ladies, even Dwayne "The Rock" Johnson, all 350 chiseled pounds of him, does not qualify. Even though he's the most fit 6'6" man in the world, he does not qualify for this plan. Cool, we'll find something else for Dwayne "The Rock" Johnson. Just this plan, unfortunately, it's called simplified underwriting. So to keep it simple, we just have to set a number and forget it. Now, if your customer tells you like, hey, I weigh 305 pounds, my next follow-up is, hey, Bob, what does it say on your driver's license, right? Bob's probably like, dude, my driver's license says 285, Nick. Awesome. All right, you're in that range. I think we're comfortable here. Now, if his driver's license says 350 and Bob's just been on a tear the last 2 years, losing a bunch of weight, Bob, we're going to hold off a little bit because probably your medical records over the last 5 years have your weight check-ins always above 300, right? Because that's what we're thinking about, guys, right? I'm not trying to penalize somebody for being close, but you have to think about it in terms of an insurance company. If they're going to pull a medical record, can we find something in the past couple years where they were under 300 pounds or not, right? William says, what about someone who already had a colonoscopy with polyps? Would they be covered? No, it's preventative, William. So that becomes something that's not preventative. That's already found. That is a diagnosis already. They're not even going to be able to get the plan, William, because of the questionnaires that are going to be coming up right here. So this is a health questionnaire. So they need to pass this health questionnaire to get short-term medical. Is any applicant pregnant, expectant parent in the process of adopting, or the process of a surrogate pregnancy or undergoing fertility treatment? That's a knockout question. In the last 5 years, received medical treatment, consulted a healthcare professional regarding AIDS or HIV? That's a knockout question. In the last 12 months, been recommended or scheduled for testing, treatment, or a follow-up surgery that hasn't been completed? Or did you consult a healthcare professional for signs and symptoms of something that we don't know what it is yet? and then all of a sudden we draw the line now, we're not paying for that, right? And then here's the big catch-all. In the last 5 years, received medical or surgical treatment, consulted a healthcare professional, or medication prescribed or recommended for this laundry list, okay? And so, William, this would be where we'd start getting into some trouble with that customer, depending on what was found in there, right? So this is, now one big thing I need you guys to understand. Consulted a healthcare professional is a play on words that you guys need to be familiar with, okay? For example, there are some things named on here that go way longer than 5 years, even though we're only doing a 5-year look back. For example, HIV or AIDS. A 5-year look back, consulting a healthcare professional. If you got HIV or AIDS 20 years ago, you're more than likely still to this day consulting a healthcare professional with it, at least annually. That's on your medical record. So it's not 5 years, right? I'll get a little bit personal here on 2 levels. Cancer. My boss had childhood cancer. He's in his late 30s now, survived it, okay? No return of cancer, nothing like that. But his doctor, doing his dang job, he consults a healthcare professional every year about cancer, tumors, lumps, or masses, because his doctor, doing a skin graft, anything feeling weird? Do you have any new bumps or anything? It is in his notes, in his medical record, that he consulted a healthcare professional about cancer. He's been cancer-free for 35 years. It's in his medical record. He can't get short-term medical, unfortunately. And now it's all get a little personal for me. This is to tell you guys, don't get hung up on this stuff. I hear agents all the time get ticked off at this stuff. Like, who the heck, Nick, why would you put bipolar in there? And then, guys, you didn't make these rules. I didn't make these rules. Just understand them, right? I'll give you a perfect example. Alcoholism, alcohol, chemical dependency, drug and alcohol abuse. My wife is 8 years sober. Love that woman. She is a beast. When we got together, she was about 2 years sober. She literally could not get this plan because she admitted she had a problem. When we got together, she was much healthier than I was. Much healthier than I was. I could be stumbling up and down the stairs every night with 2 old fashions in my hand, but because I didn't admit I had a problem, I could get this plan. She could not, right? It doesn't need to make sense, guys, right? Just understand what the rules are, and if your customer fits, awesome. If not, we'll find a different plan, right? No big deal. Cool. That is your underwriting questions here, okay? There are preferred rating questions that can get you a 20 to 25% discount. One customer can qualify when the other doesn't. It's like a husband could qualify and not the wife, or vice versa, but they're difficult underwriting questions here for that big discount, okay? This is them. Have you had insurance for 9 of the last 12 months? You don't use nicotine or tobacco. You haven't had a DUI or a moving violation in the past 2 years. You don't own a motorcycle. And then here's my fun catch-all. You don't have medication for high blood pressure, high cholesterol, anxiety, or depression. So, hey, 90% of America's knocked out right now. But that is the preferred rating question. So if you have a fairly healthy customer that you're talking to, have these in the back of your head, but just know most people probably don't qualify for this, but if they do, they get an additional percentage discount, okay? Cool. It's only the adults on the plan, so children cannot get preferred rates, okay? You guys are going to see something in the quoting system. You see like 24-month plans, 24-month fixed premium, 36-month plans, 36-month fixed premium, right? What the heck is all that? So I'm a big fan of the renewable plans because of this rate guarantee option. So if you guys are in the quoting platform selling, you should be going to the 36-month fixed premium. Okay. Now, if you guys ever want to play around a little bit, run the 36-month fixed premium and look at what the cost of something is. Then run just the regular 36-month, look what the cost is, and then run a normal 12-month and look what the cost is. It's important for you guys to know the difference in costs there so that we can meet our customers where they are at, okay? But if I'm writing a 3-year plan, which most of you should be doing right now because Allstate's paying level commission for all 3 years now, we're trying to get everybody on short-term medical right now because we know Biden might take it away in the near future, right? The fixed premium is so valuable, guys, and let me explain why. You're going to run a quote for a customer, and the 36-month not fixed premium, the 36-month regular plan might be $1,000 a month. I'm just going to throw out an easy number, right? And then you're going to look, and the fixed premium is $1,100 a month, okay? So you're like, oh man, I'm going to save my customer $100 and just get them on the 36-month plan. Guys, on that 36-month plan, any of you that have been in the insurance industry any amount of time and have seen renewals happen, most of the time, renewals on health insurance have somewhere between a 20 to 25% rate jump. Anybody in this chat that's been here more than a year can confirm that for you guys, okay? 20 to 25% rate jump. I'm a math nerd, so 25, let's just do the low end of that. Let's say 20%. So 20% of $1,000 is $200. So I have the option today to write my customer on $1,100 a month fixed premium. That means year 2, they're going to pay $1,100 a month. Year 3, they're going to pay $1,100 a month, or roughly right there. Maybe it goes up $1 or $2. Or I can be cheap today for my customer, save them $100 today. Year 2, they're going to get a 20% rate jump if we're nice. Their plan's going to go up to $1,200 a month. And then year 3, they get another 20% rate jump if we're nice. And now that's $240. You're up to $1,440. So that health plan, because you wanted to save them $100 today, hopefully you're ready for that customer service call when it goes up to $1,200. And then hopefully you're ready for that customer service call when it goes up to 14 plus. And it's going to happen. Write the fixed premium, save yourself the headache down the line. Okay. That's all I'm going to say on that one, guys. Big thing like that. Deductible and co-insurance reset every year. So if you write them on a 3-year, cool. If their deductible is $5,000, it's $5,000 for this year. Next year it resets. The one thing that does not reset on these renewable is the coverage period maximum. So if you're on that $1 million coverage period maximum, that's $1 million for the 3 years. So make sure you're still doing your annual follow-ups with your clients to make sure they're not getting close to getting there. Okay. Very, very important. Oh, and then here's one of my favorite things, guys. The top bullet point over here on the far right. Eligible expenses for pre-existing conditions are covered after 12 months of coverage. So what does that mean? If you have a pre-existing condition that is not a knockout question, right? A pre-existing condition that's not HIV or cancer, after you've had this plan for 12 months, the 13th month, we'll give you coverage for it. I'll give you an example of that. I broke my collarbone 10 years ago into 4 pieces. I never got it surgically repaired because I had an HMO plan that sucked, and it took me a week to go see a shoulder specialist because that's how HMO plans work. And by the time I got to the shoulder specialist, they told me it's already calloused up and healed. It would be harder for us to go in there and re-break it and do everything. So to this day, I have a collarbone that pokes out right here because it healed with a bone poking up. True story. It's been like that for 10 years. Killed after a good shoulder workout, murders. For me, that's a pre-existing condition, but it is not a knockout pre-existing condition, right? You didn't see a questionnaire about that, right? So if I had this plan and I wanted to let them re-break this thing, and maybe at some point I will, I can get that coverage after the 13th month, okay? Things like a bad knee, rotator cuff, things like that. So think about that. Those items that are still pre-existing, like, hey, I've been carrying this wound for a few years. I just didn't want to go get it taken care of. We will take care of that after the 13th month on these plans. So cool little caveat there. Life Association is our association. Anthem is Blue Cross Blue Shields Association. They're legally required in 40-some states, okay? So if that's the case, it's not optional, it's just required. Big thing to let your customers know. Of course, Amy. Telemed is included, all right? No additional cost. They can call a doctor or physician 24/7. That's a huge benefit. And then also use these hospital and diagnostic facility negotiation services. Massive, 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 okay? Francis asked, you have states listed with 11 months of coverage. How does that affect a 3-year, 36-month renewable? If 11 months is the maximum, we probably don't have a 36-month available in that state. If you see a 36-month available in that state, that means we were very creative in the way we built those plans to fit within legislation. And it's like I don't remember the state, but years back, I remember where we had a 1-day gap in coverage so that we could say, hey, no, we broke coverage, and here you go. So you're locked in for 3 years, but day 364, you actually don't have coverage. But I don't know if that's what they would be doing on that South Carolina one. If that's the scenario, I don't know South Carolina off the top of my head, so forgive me on that. But if they have a 36-month plan in that state, something creative like that is put in effect so that the plan can still work, okay? Limitations and exclusions are all very normal, guys, right? Cosmetic service, we're not going to pay for a boob job for you. Sorry, right? We're not going to pay for hazardous activities. You jumped out of a plane and hurt yourself. Sorry. You went black diamond skiing and started tumbling down the mountain. Sorry, right? These are all very normal things that we're not going to kick in and pay for. We don't pay for maternity either in short-term medical. Very important to know, okay? Cool. Ooh, I love this question from Jean-Claude. Would an undocumented alien be approved for these short-term medicals? I love it, Jean-Claude. My father was an illegal immigrant here, so I love this. So we do not require a Social Security number in our application. That's the first thing. So you can write an application without a Social Security number. It is not required. This is where the one caveat, Jean-Claude, okay? And I never argue with the customers on this. I live in Southern California. Please believe I know plenty of undocumented aliens, right? It's very normal here, okay? It is not my job to argue with my customer on whether they are here legally or not. If they tell me they are here legally, awesome. What I need to tell you, if you tell me you're here legally, I do not need your Social Security card, okay? I do not need your Social Security number or anything like that, okay? But if you have a claim, you will need to show legal proof of residency. If you submit a medical claim, they're going to make sure that you are a legal resident here. So you need to have a K-1 visa, student visa, right? You need to be here legally. It's not for me to determine at time of application. I don't care. But I'm going to make sure I tell my customer, look, you don't need to give me a social. I don't care what your legal status is if you're not comfortable telling me. But just know, if you get this plan and you're going to submit a claim, they're going to need to see legal proof of residency if that happens, okay? Brian says an accident like skiing not covered. Brian, that's honestly open to interpretation on hazardous activities, right? It depends how hurt you got skiing on that hazardous activity and how dangerous you were being up there, right? But for an example, if you're a ski instructor, we're not paying for that. We would consider that a hazardous occupation. For the most part, skiing accidents, we would consider a hazardous activity for the most part, but I have seen somebody break a leg in the bunny hill and that can get paid for. So it just depends. It's not a 100%, but if we can draw a line and say that was a hazardous activity you were doing, we're not paying for it, okay? Cool. Enrollment any day of the month, we already talked about that. We take any type of payment, but make sure you guys are getting a routing and account number. Credit cards change, they cancel all the time. You don't want your health insurance plan to cancel, okay? And then the payments can always be the 1st to the 28th of the month. So those of you guys trying to write somebody for the 29th right now, it's not going to let you take a first payment on the 29th of this month, okay? And it's happened. I've gotten 2 calls on that already this month. So don't try to write somebody on the 29th. It doesn't allow because that day disappears every year for every 3 years, right? So, or every 4, I don't know. You know what I'm saying. Cool. This website you guys need to bookmark. Allstatehealth.com. Allstatehealth.com. Bookmark this. And then you're going to go to the agents and brokers tab up top. Okay. There's cool things in here, guys. The biggest things for you guys, it has agent tools and information. That's where you can get brochures. All the stuff I just went over, you can get literally right there. It also links you to our YouTube channel if you want a YouTube video of these products and everything. It's got marketing materials so you can print out brochures and flyers for your clients. All that. So allstatehealth.com, save it, okay? For existing customers, you can find their doctors. You can look up doctors and things like that, submit claims forms, all of that, okay? So make sure. Yeah, Roy is right. Recreational skiing is covered, but again, if you're going too high up the mountain and you know the people, this is what they do. They've got a Instagram following and things like that. We're not going to pay for that, right? If you're a normal recreational skier, you're fine. You didn't go over this today, but I have a question about plan enhancer on a family enhanced PPO. Does each person on that plan get their own plan enhancer benefit just like they have their own deductible? Yeah, absolutely. Yeah, plan enhancer, guys, is for each member of the family. That's absolutely right. Yeah. Cool. And Samuel, the recording will be posted to whichever agency you're with. It'll be posted in your library, wherever you get all your recordings at the end of this. Okay. Cool. That is short-term medical, guys. Took right at an hour there. So remember, just know the differences between the HSA and the normal, and that'll kind of help you lean one way or the other. Do not tell your customers this is an Obamacare plan. Don't lie to them. If it's short-term medical, just tell them I'm selling you short-term medical, and in my opinion, it works better than Obamacare in a lot of states. Cool. That's all I got for you guys. If you have any questions, throw them in the chat, or you can email ngahtraining@ngic.com. I love you guys. Can't wait to see your sales coming through. Thanks for attending, everyone.